In a surprise development that captivated global media, the United States and Pakistan have signed a landmark trade agreement centered on developing Pakistan's untapped oil reserves and slashing bilateral tariffs. U.S. President Donald Trump, speaking via social media, described the collaboration as a game-changing partnership and hinted that Pakistan might one day sell oil to India, a bold, if speculative, nod to shifting regional dynamics. Unearthing Pakistan's energy potential. Pakistan is not traditionally known as an oil powerhouse. According to the CIA, the country holds about 332 million barrels of proven oil reserves, a figure that ranks it around 52nd globally, placing it behind countries like Turkey. Turn Zero Search 11. Current production is modest, at less than 100,000 barrels per day in 2023 against domestic consumption of over 550,000 barrels. Turn Zero News 24. Yet recent offshore seismic surveys, particularly in the Indus Basin, have suggested potentially vast reserves that may propel Pakistan into a higher tier of oil-producing nations, if proven viable. Turn Zero Search 15. Although these are early signs, they offer a compelling lure for investors and strategic partners, particularly as global energy markets recalibrate post-pandemic. Details of the Pakistan U.S. trade and oil development deal, announced coincidentally with a broader U.S. Pakistan trade agreement. The new deal includes joint U.S. Pakistan oil exploration, especially in Balochistan, a province known both for resource promise and insurgency risk. A directive to select a U.S.-based oil firm to spearhead development, signaling American involvement at an operational level. Simultaneous tariff reductions on Pakistani exports to the U.S., opening the door for expanded commerce in sectors such as agriculture, textiles, and technology. President Trump framed the deal as both economically transformative and geopolitically significant. Who knows? Maybe they'll be selling oil to India someday. Strategic and geopolitical ramifications. This agreement marks a strategic pivot in U.S. Pakistan ties. For Pakistan, it offers the opportunity to transform from an oil importer to, potentially, a producer with export capacity, an outcome with enormous economic and political significance. Balochistan's role and security challenges. The focus on Balochistan remains controversial, as separatist groups and nationalists object to external extraction of resources, citing economic disenfranchisement and environmental impact. Diversifying energy partnerships. Beyond the U.S., Pakistan has flirted with energy agreements involving Chinese or Saudi stakeholders, most notably the plans for a $10 billion oil refinery in Gwadar and the Gwadar-Kashgar pipeline project. These global arrangements could now become multi-vector alliances. Regional dynamics and India factor. Trump's remark about Pakistan exporting to India quickly became fodder for speculation and jest. Businessman Harsh Goenka famously dismissed the idea as more plausible in the world of Lagan, underscoring the current gulf between speculation and feasible development. That said, if even a fraction of Pakistan's offshore reserves prove extractable, it could trigger a redefinition of South Asian energy dynamics. Economic and domestic impact. The implications for Pakistan are substantial. Energy security gains. Increased domestic oil production could reduce expensive imports, ease pressure on the current account, and help stabilize the rupee. Revenue generation. Oil royalties and export earnings could provide much-needed income for the government, or fuel unwieldy bureaucratic expansion if mismanaged. Investment flow. A U.S.-led exploration project could trigger further foreign investment, possibly involving infrastructure, technology transfer, and job creation. However, experts emphasize caveats. Past attempts at development have faltered on red tape, inconsistent policies, and security complications. Skeptical energy analysts warn against runaway optimism. Pakistan needs proven reserves, transparent governance, and community inclusion to avoid repeating past errors. Global energy and geopolitical context. For Washington, the deal signals a tactical reset. It diversifies energy partnerships, and counters Chinese influence in the region. Additionally, developing rare earth and oil resources in Pakistan could bolster U.S. supply chains in tech, defense, and manufacturing. Meanwhile, India watches closely. Recently slapped with a 25% U.S. tariff over its energy ties with Russia, Delhi may view this development as both political alignment and economic advantage. But it also flags increased competition for energy access, both at sea and on land. What lies ahead? In the next 6 to 18 months, key indicators will determine the trajectory of this initiative. 1. Which company is tapped? The choice of U.S. firm, like ExxonMobil or Chevron, will speak volumes about future investment confidence. 2. Location and viability. Will the focus remain in Balochistan or expand to Sindh, Punjab, and Khyber Pakhtunkhwa? Commercial success depends on geology, security, and infrastructure. 3. Policy coherence. Will Islamabad address legal frameworks, local grievance redressal, and equitable revenue sharing to avoid local backlash? 4. Global reactions. China, which has invested heavily in Pakistani energy and infrastructure, may recalibrate strategy in response to renewed U.S. involvement. Summary. Pakistan and the U.S. are staking a bold claim that Pakistan may hold untapped energy wealth, and a revitalized partnership could unlock strategic and economic advantage for both. For Pakistan, it could signal the end of its status as a perpetual oil importer. For the U.S., it's a step toward increasing regional leverage. For India, it represents both a strategic challenge and an opportunity for recalibration. Ultimately, whether this deal becomes a corner-turning moment depends on execution, security landscape, and political will. As always, the world will be watching, especially if the massive reserves turn into real oil flowing into new pipelines, tankers, and refineries.